It's Matt Simpson from Forex.com, and I want to talk about gold given its decent rally on Wednesday, which I'm pleased to see because I've been calling for a low for a few weeks now. In fact, we could go back to June, the video outlining quite a good reason I thought as to why it might rally, at least in July, given it had lost about a third in value, volumes were declining, and seasonality was on its side. So we'll take a closer look at the charts and see where we can go from here. If you cast your eyes back, this is the record high in January, and we can see that pretty decent downtrend overall, but repeatedly gold failed to break beneath 4,000. But then look at yesterday's bullish breakout from this compression pattern. It was actually its best, almost bullish, open to close range since February, and its most volatile high to low range since early April. And when you see such a volatile move to the upside after consolidation that failed to break lower, and my guess is that there'll be some traders who really wish they'd have seen that move coming, and they'll be looking for any sort of opportunity or pullbacks towards original range or even within yesterday's bullish candle. But there's also some bullish clues on options, futures and seasonality, which could give more of a solid case as we get towards September. So as a quick recap for seasonality, gold tends to generate positive returns in Q3, looking at data back from the year 2000. August has been the highest average and median returns of the quarter of around 2%. With a win rate of 64%, and of those bullish months, an average return of 5.5%. September has produced mildly bullish returns and win rate on average, but August has generally been the standout month on Q3, and it's still quite early in the month. The futures market shows a mildly bullish case, but context matters. Net long exposure has been trending higher overall among managed funds and large speculators, though we've seen a slight reduction of longs and shorts in recent weeks. It's not a bullish sign with conviction, but this bullish range expansion candle does stand out, and that is the type of counter-trend momentum that can tempt a secondary move in the same direction. Now, what I find particularly interesting for the bull case is the repricing amongst option traders. Risk reversals have soared higher at a much faster pace than gold prices. This suggests demand for calls has risen relative to demand for puts or downside protection. Now, risk reversals have been negative for most of the year, which means downside protection has dominated overall anyway. But we can see that all three of these measures, which represent tail risk and longer-term institutional sentiment, are all on the cusp of flipping to positive. And when it does, it means there's more demand for calls overall than puts. So let's take a closer look at the price action. So on the left, we have the daily chart. On the right, we have the 4-hour chart. What immediately stands out is that this rally has stalled almost perfectly at the June VPOC, which is the most traded price by volume in the month of June. And it's also hit the monthly R2 pivot point as well. Looking down at the RSI show they've both been overbought, but the daily RSI is not yet overbought. So this will take longer to play out, but to me it's saying that after this bullish divergence, it's now confirming the rally, and this could still allow for the RSI to rise alongside prices before it reaches its own overbought level. So given the resistance levels, I'm basically looking for a pullback, and obvious areas to look out for: the 4200 area, which is the previous range highs thereabouts, or even as far as that low. Another way to look at consolidations is they do make pretty decent support levels. In fact, we can measure the most traded price by volume within that range, and it sits around 4083. But given the strength of that breakout, I'm not looking for such a deep pullback. I'm just saying there's lots of areas of support down here if we do get a pullback. And in some ways, we'd like to see that because it could improve the reward risk ratio for bulls in hope of a movement up towards the 200-day average, around 4500, or even these swing highs around 4600. Of course, we need to keep an eye on the US dollar, but the US dollar is rolling over at the moment anyway. So put together, my bias at the moment is there's a greater chance of gold reaching to 4600 before it retests these lows around 4000. In theory anyway, as always, time will tell. As always, hope that's useful. Wish you best of luck with your trading.